Orrin Woodward once said, a person either disciplines his finances or his finances disciplines him. Keep this in mind as we discuss today with one of our guests the meaning of where the United States is headed financially and economically. My name is Dr. David Oualaalou.
And my name is Elizabeth Ann Stewart.
And you are watching Geopolitics in Conflict.
Today, our guest is Peter Schiff, and he is somebody that we have personally followed for a very long time, and we are very honored to have him on the show. Thank you so much for being with us, Peter.
Well, my pleasure. Thanks for inviting me to be a guest on your show.
So a little bit about Peter. Peter is an economist and financial investor and host of the Peter Schiff Show podcast. Peter has appeared on many, many media outlets as a financial commentator and analyst. Peter is the author of many books, including How an Economy Grows and Why It Crashes, and The Real Crash, America's Coming Bankruptcy, and How to Save Yourself and Your Country, among many others.
Well, great. So without further ado, let's dive into it, Peter. I would like to start with the first question, asking your opinion as to where do you see the United States headed financially and economically, given the amount of inflation and how the United States government is lying about it?
Well, we've been kicking the can down the road for a long time now in the United States. And the road, I guess, has been longer than I thought it would be. But my guess is that we're pretty much nearing the end. And there's no more room to kick the can. We're going to have to deal with it. And of course, it's a lot bigger now than it was when we first started kicking it. The problem is, the economy has been built on this phony foundation of consumption and debt and money printing and artificially low interest rates. And so the entire U.S. economy is this huge bubble, and it is completely unsustainable. And I think the evidence of that is now been laid bare. It's just that so many people refuse to accept it. But you can see the consequence of inflation now manifesting itself in a very big way across the board in consumer prices. And, the initial reaction by the powers that be, by the Fed, is to dismiss the significance of what we're seeing, kind of say it's transitory, the same way they initially said the subprime market was contained, don't worry about it. They're also trying to scapegoat it. They're trying to blame the increase in prices on our prosperity, on the strength of our economy, on supply shortages or bottlenecks. But this is really the tip of an enormous iceberg. The inflation is going to get worse, not better, in the months and years ahead. And it's ultimately going to result in a dollar crisis and a sovereign debt crisis, the enormity of which will make the 2008 financial crisis look like a Sunday school picnic.
Well, speaking of the 2008 crisis, you were absolutely correct in your assessment. I mean, you hit the nail on the head. And I know it was some pushback regarding your assertion. It turns out to be you were right as far as the real estate market in 2007, but nobody wants to hit that. So, but just to go back to the idea of the inflation, Peter, do you see any, for example, reverse to what happened in the 80s during Volcker, when he was the Fed chairman at the time with Reagan, and they worked out the inflation? We all know the inflation was high back in the 80s, and yet they worked out.
Yes, but you have to look at what we were willing to do. Interest rates went up to 20% in order to rein in that inflation. And we went through a very severe economic downturn, which at the time was the worst recession since the Great Depression. But the problem is we are not in the strong financial position that we were in as a nation in 1980 to be able to weather the storm that would result from a real fight against inflation. Because imagine the problems that we would create if we had to go Paul Volcker on the economy now. If the Fed had to dramatically increase interest rates, the whole economy would implode. You know, we're so levered up with debt. And it's not just that we have a lot of debt, but that it's financed really short term. You know, you go back to 1980, the whole national debt was financed with 30-year U.S. Treasuries. Now it's financed with T-bills. About a third of the debt comes due in the next year. So if interest rates, let's say they went to 10% from zero, we would have to refinance $10 trillion at 10%. That's $1 trillion in interest just on that third of the debt.
Yeah.
But of course, we're adding $3 or $4 trillion a year to the national debt, which needs to be borrowed. So the extra interest there is another few $100 billion. So, you know, we are the world's biggest debtor nation. You know, in 1980, when Volcker raised interest rates like that, we were the world's biggest creditor nation. Now we're in debt up to our eyeballs. We owe more money than all the other debtor nations combined. How can we possibly handle high interest rates? The reason that rates are at zero is because we can't handle anything above zero. I mean, look at look at Powell in his press conference on Wednesday. He talked about how strong the economy is. You know, we have a great economy. We have all this growth. We've got, you know, a strong labor market. Yeah, we're not at full employment, but everything else is great. But then he said raising interest rates would be inappropriate. That this strong economy needs 0% interest rates. It needs an interest rate that you would, you know, you look at in an emergency when everything is collapsing. That's the rate that we need. That's what's appropriate. And that's kind of an admission that this entire thing is a bubble, and even the slightest rate hike would prick it.
Wow. And where this, just to follow up this before I turn it over to Elizabeth here, where this fits with the printing that the government is getting onto. I mean, a lot of Americans have no clue, have no understanding that you can't just be printing money forever.
No, I mean, we've been printing it for a long time. So people just assume we could do it forever, but we can't. And, you know, we've had this massive increase in government spending recently, but nobody's taxes have gone up. So how are we paying for this? We're not getting all this government for free. We're paying for it through inflation. The government is printing money, and as a result of that, the price of everything goes up. And so the higher price amounts to a tax, and that's how we're paying for government.
Wow.
Well, and so, you know, there's a really big discrepancy with what the government is saying the inflation rate is versus the observable inflation rate that's happening right now. Do you think that what's happening is they're just trying to sort of pull the wool over people's eyes?
Well, of course. I mean, the government never wants to admit that inflation is as bad as it really is. I mean, that's why the CPI was re-engineered years ago so that the numbers would be lower. You know, they looked at the CPI and they said, oh, the numbers are too high, so they fixed it. And, you know, they did. The fix is in, and the numbers are now much lower than the price increases that you experience. I mean, a perfect example is the use of owner's equivalent rent, which is some made-up number where they supposedly conduct a survey and they ask people, hey, if you had to rent your house, how much rent do you think you could get? And somehow they use those responses to determine rent. And rent is about a third of the CPI. And if you look at real rents, they're up about 12% year over year.
Yeah.
Housing prices are up about 20%.
Yep.
But according to the government, the cost of renting a home or home ownership is only up about 3%. So that's the number they use for the biggest part of the CPI. And that number is just a fraction of what average Americans are experiencing if they want to rent or buy a home.
Wow.
Well, and it's been interesting, even although I'm young, even though over my lifetime watching rent. So we live here in Dallas, Texas, and watching the rent increase from, even when I was in college to right now, it's at least threefold to get a decent place to live in terms of renting. I own my property, but when I was renting, it was a really big problem. And the last place that I rented, I thought to myself, how do most people afford this?
Yeah. And, not only are rents going up because of inflation, but if you look at what the government did during the pandemic, they basically said nobody has to pay their rent. So the government said that we don't give a damn about landlords, right? And they set a new precedent. Anytime there's an emergency, we just, say that tenants don't have to pay their rents. And so landlords now have to bake this in to the rents that they charge when times are good, because they know as soon as things get bad, there'll be another moratorium. So the landlords now have to raise their rents to compensate for the rent they know they're going to lose the next time the government does this. The government has made owning rental properties much riskier, because your cash flow is in jeopardy if the government decides they're going to pass a moratorium. And I think what's going to happen too is a lot of landlords are going to say, I don't even want to be a landlord anymore. It's too risky. And they're going to take the properties off the market. Maybe they'll sell them. But I think the supply of rental housing is going to go down, which is going to put even more upward pressure on rents.
Well, and as we've heard this term thrown around a lot, that we're becoming a renter nation. And as supply goes down in rent and pushes the price up, what do you see happening to people?
Well, people are going to ultimately have to, take roommates, so that they can reduce their rent by sharing their apartment or their house. I think some people are going to rent out rooms. You can maybe your kids have grown up. They're, although some of the kids are going to come home and live with the parents, or some of the parents might have to go back and live with their grown kids. But you're going to have multiple families, under one roof. That's how people will get by, because I think that new construction of rental units is really going to stop. Because number one, the cost of the materials has gone way up. And the labor, it's hard to find the workers.
Absolutely.
And so you can't even build these homes anymore at a price that anybody can afford to pay. So I think, it's the stock that's here that we're going to have to deal with. And, the population is growing. And if the housing stock is not, then that's a problem.
Peter, I had one day a conversation with a financial investor. And the conversation was about, my argument was, listen, the more the government prints, the weaker the dollar is going to be. And his argument was like, no. The dollar will always be strong. Look at the demands around the world for the US currency. And I was like, it can be. And I said, I'm going to prove it by talking to someone to get a different perspective.
Well, there used to be demand for dollars to buy treasuries. Well, nobody wants treasuries now, not even the Chinese. But people have, want dollars to buy tech stocks in the U.S., to buy Apple or to buy, Microsoft or a lot of these other high-flying names that are much more expensive than the ones I just mentioned. A lot of them, even the meme stocks, the COVID stay-at-home stocks. But, the bubble in those stocks is popping. Look at Peloton today down 35%, bid up on a fantasy. I think the appetite for overpriced U.S. growth stocks is going to fade. And then what does anybody need dollars for? We have the biggest trade deficits in history right now. So we're flooding the world with dollars that they don't need to buy our products. We're buying their products. So to say that there's always going to be demand for dollars, no matter how many we print, is very naive. I used to talk to people about the housing bubble 2004, 5, 6, when I was talking about housing prices collapsing, and people would say, no, it's not going to go down. There's not enough supply. Nobody wants to sell. And I said, yeah, nobody wants to sell because the houses keep going up. But once the housing prices start to fall, all these houses that are not on the market, a lot of them are going to get listed.
Yeah.
And the supply is going to swell. So just because we've had a shortage doesn't mean we can't have a surplus. And, we're going to have a surplus of dollars, a glut of dollars, because people are not going to want them anymore. And we're going to keep on adding more and more to a supply in a saturated market. And, what do you need them for? You need currencies to buy the products that the countries export. But we have a $1 trillion a year deficit in our balance of payments. So we're giving the world a lot more dollars than they need. And eventually the bottom drops out of the market because they start selling the dollars. Who's going to buy them? Nobody needs them.
Yeah, well, we certainly noticed that with China now that they are not buying as much as they used to.
No, they're selling. They're like gradually winding down their portfolio. I don't know why they're not moving even faster. But obviously, they're increasing their holdings of other assets, probably gold, but also other currencies. And so the percentage that dollars represent of their reserves is going down faster than the reserves themselves.
So you touched on trade deficit, and that's something that I've sort of been keeping my eye on because I think it's not being talked about enough. And you spoke to, that we had the highest all-time trade deficit very recently.
Yeah, it's not being talked about at all. The only time the trade deficit was an issue was in the 2016 presidential election because Donald Trump correctly made it an issue. He criticized the Obama economy for record trade deficits, and we were losing on trade, and we were supposed to elect Donald Trump to win on trade. He was going to turn the situation around and rebuild our industrial base. Well, it turned out that was just a lie because Trump didn't actually do anything, right? Trump didn't do anything to turn the economy around. He just doubled down on the failed policies that he inherited from Obama and Bush. So the trade deficits actually went up under Trump, not down. So we lost even bigger on trade with Trump than we did with Obama. But now that the baton has been passed to Biden, the trade deficits have shattered all the records. And so we're losing even worse. But at least we talked about it, in 2015, 2016. We don't talk about it at all now. I mean, we used to talk about the trade deficit during the 1980s. People recognize it as a problem. In fact, a lot of people blame the 87 stock market crash on the big trade deficits. But even though the deficits are much bigger now than they were back then, no one cares about them. And again, it's because they've been bad for so long without any crisis that we've been lulled into a false sense of security that they no longer matter. Well, they matter. It's just that the markets don't care about it yet. But when they finally care, it's going to matter more than ever.
Well, and so that's sort of my next question is, people, because it's been bad for so long, it's the same with the money printing, right? It's been that way for so long without a crisis. But, I think there's overall a sense that a lot of these are actually coming to a head. And so what do you see the real consequences of this trade deficit being?
Well, again, it's going to be a dollar crisis. I mean, the trade deficit represents the underlying weakness of the U.S. economy.
Yeah.
It shows that we're living beyond our means because we don't have the capacity to produce these goods ourselves. So the world is supplying us with the stuff we can't produce. And how are we paying for all this stuff? Well, we're not really paying. We're just printing money and giving it to our trading partners. But at some point, the trading partners are going to want something real. They don't want paper. They want the same kinds of products that Americans want. And eventually, they're going to stop selling us their products, and they're going to consume those products themselves. So they'll keep their stuff, and we're going to get stuck with our paper. but we're going to have all this paper, all this money, but nothing to buy. And so the prices will go way up as the dollar comes crashing down.
Wow. Well, I look down on going into that direction of, for example, what you just mentioned about the products, like, for example, microchips.
Yes.
You can just see where, for example, China, in this case, moving forward with, they're going to have to be self-reliant.
Mm-hmm.
And that,
America is going to take a lot for us to become self-reliant because we've been dependent on the world for such a long time now. But, now look, they're saying, oh, the problem is we have these supply shortages. We're importing more than ever. So, the problem is we're not producing anything ourselves.
Yes.
And we have, except money. We're printing all this money. And that's the problem. It's too much money and not enough stuff.
Well, one of the things that we talk about on our show, we talk about China a lot. And, China is where we get a large amount of stuff. We get a lot of our stuff from China.
Yep.
And as they've grown wealthier, it's been an interesting conversation to have. How did they get that wealthy, right? Who gave them that business? Who gave them that money? We did.
Well, they got wealthy because they moved away from communism towards a capitalist market economy. I mean, it's not a complete free market. I mean, nobody is really these days. So it's a question of degree.
Yeah.
But the government backed out of the economy in a significant way, and it unleashed economic growth. So we didn't give that to China. The Chinese gave that to themselves. I think they would have gotten a lot richer had they not exported so much to the United States in exchange for our paper money. I think that trying to keep their currency from rising against the dollar so they can keep selling products here, I think that was a net negative for the Chinese economy. And they could have been in much better shape had they pursued a different course.
That's interesting.
Wow.
I hadn't heard that perspective before.
That's very, very interesting. So
because, they accumulated a bunch of dollars, but at the end of the day, let's see what those dollars are worth. They're trying to get rid of them now, but they still have trillions,
Yeah, absolutely. They have an enormous amount. So do you have any opinion on sort of where the Chinese economy is headed right now? Evergrande sort of put some of their economic woes right in everyone's faces. And I think a lot of people were a little bit blind to that before the Evergrandes.
Yeah, there are a lot of potholes in the road, to China dominating the world. But, the U.S. economy experienced similar growing pains along the way. So I think that overall, the Chinese economy is positioned to be the dominant global economic power. China has dominated the world for a lot longer than the U.S. has. I mean, you go back throughout history and you look at various periods of time where China was, the strongest, largest economy in the world. I mean, so America's position, 100 years where that's been the case. So, I mean, China's had that position for many, many centuries. Maybe, I don't know the exact number of times. I mean, how many centuries, but many. And so China dominating the world is more the norm, and so I think they're obviously going to be back on top. I think the majority of this century, which is really young, right? We're in the second decade of the century. And, long before we get to the middle, I mean, I think even by the end of this decade, it's very likely that China will be a larger economy than the U.S.
Wow, that's interesting. I want to go back to one point, Peter, about the financial market here in the U.S. And because I'm a little bit perplexed as to which direction this might go. And this one has to do with the stock market, okay? There are those who are saying, should we be expecting another crash like the one in the 1930s? On the other hand, there are those who are saying, no, you don't have to worry about that because stock market is performing well despite whatever the economy of the US. Which one is which?
Yeah.
Well, I don't think we're going to have another crash like the 30s, but that doesn't mean you don't have to worry. Because during the 1930s, we were on the gold standard.
Okay.
We don't have that benefit anymore.
We do not.
And so the market can still crash as much as it did in the 30s if you measure it in the price of gold. So I think in terms of gold, and gold's around 1,800 an ounce right now, and the Dow's around 36,000. But if the Dow crashes to the point where it's worth 1 ounce of gold, which is what happened during the 1930s, you got by about 1932, the Dow and gold were about the same price. That could happen again. And maybe it happens with, the Dow at 50,000 and gold at 50,000. But if the Dow and gold are the same price again, the Dow crashed. I don't care, what the nominal price is. Because, see, this time around, it's the dollar that's going to crash. Right? So if you're simply measuring the value of stocks with dollars, if the dollar itself loses a lot of value, then, it may look like the stock market's gone up. It's like if you're 6 feet tall and I give you a ruler that only has 6 inches in it, and now you measure yourself, it doesn't mean you're 12 feet tall. You got to look at that ruler. I've cut the ruler in half. Your height hasn't changed. It's the ruler that's changed. And so now you're taller because a foot now has 6 inches, right? So if the dollar loses a lot of value and then you go and try to price stocks, well, obviously the price is going to go up when you're measuring stocks with money that's worth less. Gold is an objective measure of value. That ounce of gold doesn't change. The government doesn't print any gold. So if you really want to know what's happening to prices, you need something like gold as an arbiter. So you can look at it through a lens that doesn't change. And if you do that, you will see a crash in all of these overpriced assets. And, and the way Americans will see that crash, right? Your stock market portfolio, maybe it doesn't go down, or maybe it goes up, maybe it doubles. But when you go to the supermarket, everything is 10 times as expensive. Right? Your electric bill is 10 times as expensive. So if your stock portfolio has doubled, but your cost of living has gone up 10 times, your stock portfolio has actually lost value.
Yeah.
Because its ability to help, offset your cost of living has been diminished. The real value of those stocks has gone down relative to all of the goods that you want to buy. Because when people invest in the stock market, nobody buys stocks because they want stocks. They don't hang the certificate, on a wall and admire it. People are buying stocks because they hope they can sell them at a profit or take the dividends and then go out and buy stuff. Right. It's the stuff that they want. Stocks are just a means to get you more stuff, right? So, but if the price of the stuff you want is skyrocketing compared to the value of the stocks you own, you're getting poorer, not richer.
Wow. That's very interesting explanation, because now it makes sense to me, Peter, why Russia has moved 2 planes full of gold from Venezuela. Why a full plane from Switzerland flew to China with gold. And
some of these countries now don't trust having their gold stored by third parties. They want it themselves.
That makes sense, Peter. That makes sense, because I didn't put the 2 and 2 together at the time when I came across that info. Only to find out last week that Russia is working on dumping the US dollar.
Yes.
They are moving into that direction. So could it be?
Yeah, I mean, I tell all my clients, you don't want to be the last one on your block to sell your dollars. You got to get out early.
Wow. That's very interesting.
Yeah.
I didn't realize that at the time when I came across that info, because I had some of my contacts that I talked to in Europe, and I was like, it just didn't dawn on me at the time, Peter. So your explanation makes perfect sense to me now as to why that is. So.
Well, so go ahead.
No, you go ahead.
So because we have a really global audience, one of the things that we're interested in, and I would love your opinion on this, Peter, is, the US is going through a lot of these financial woes, let's call them, but that affects the entire global economy. So how do you see it impacting the Chinese economy, the Russian economy, and sort of the global economy as a whole, as all of this shifts around? Because we are seeing countries like Russia, for example, trying to get away from the US dollar. So how does that impact everyone else? And how do you see that maybe reshuffling? And does the US dollar lose reserve currency status? What do you see happening there?
Well, it's totally going to upend the current economic system, where Americans, really sit in an envious position. We are the major beneficiaries of the dollar's status, because it enables us to live beyond our means. We can import all these goods without having to produce them. And it's expensive to produce goods. It takes real resources, and creates pollution, right? So we get the benefit of all these factories without actually having to deal with them. They're in some other country. And because we have the reserve currency, we can borrow a lot of money, but we don't have to save much money. And the borrowing, and spending, that's the fun part. The saving and producing is the hard part, right? So we just get to do all the fun stuff. And the world is doing all our heavy lifting. So, when the dollar crashes, and it will crash, then our whole standard of living is going to implode with it. But as bad as that's going to be for America, it's actually going to be a relief for the rest of the world, because the rest of the world will no longer have to bear the burden of supporting the U.S. economy. So the rest of the world will have more stuff to consume, and they'll have more of their savings to invest productively in their own economies. They won't be lending as much to us. So they're going to reclaim their savings. They're going to reclaim the consumer goods that they produce. So the rest of the world is going to get to have more, and America is going to have to make do with a lot less.
Wow, that's interesting. Speaking of the borrowing, because that's, I don't know if some of our viewers know or not, but the invasion of Iraq, the money that the U.S. used was borrowed from China.
Well, I mean, all the money we use is borrowed from someone. But the problem is now it's borrowed from the Fed, so that's not even real. They just print it.
Now, this Fed, speaking of the Feds, Peter, it's like it's about time somebody asked the questions. Why the Fed doesn't get audited? I mean, I know it's a cartel of bankers, but most Americans do not understand how the Feds
Most
operate.
Americans don't even know that.
No, there's been, Ron Paul, had a big push to audit the Fed, but it didn't really go anywhere because nobody really wants to shine that light. It's people are afraid of what it would reveal.
Wow. But because they're dictating as far as the fiscal policies and so forth, but not to the betterment or the benefit of the average citizen.
No, the Fed is obviously the single most destructive organization we've created. It's been a disaster. I mean, certainly some people have benefited dramatically from the existence of the Fed. But their numbers are few compared to the overwhelming number of people whose lives have been made considerably worse as a result of the presence of the Fed and their manipulation of money supply and interest rates.
So we have our own take on why this is happening, but we have policymakers, and they can't all be completely blind to this. How do you think that this is allowed to keep happening? I think it's common sense, right? It's common logic to sit there and say this money printing is not going to end well. The trade deficit is not going to end well. The debt is not going to end well. And I think even an average person can see that, just thinking it through, it's not going to end well. So why has nothing happened to stop the way that we're going right now?
Well, because nobody in power has an incentive to stop it. You know, the politicians certainly don't want to. They don't want to end the party. They don't want a crisis happening on their watch because in order to do the right thing, it would mean a pretty severe, economic event. And, there's an old, saying about, don't shoot the messenger.
Oh, yeah.
Right? I mean, nobody wants to bring that message to the voters. Nobody wants to get blamed because the American electorate tends to blame any problem on the guys in power when the problem, rears its head.
Right.
They're not sophisticated enough to look back at the real origins of the problem, right? If you're the president, if you're in Congress, anything good happens while you're there, you get the credit.
Right.
Anything bad happens, you get the blame. Right? So no one wants to get blamed for this disaster. So everybody wants to kick the can down the road so somebody else will get blamed for the disaster because it will happen on somebody else's watch, after the next election. So, and certainly Wall Street doesn't have an incentive. I mean, they're making so much money off this bubble. They don't want the party to ever end.
Yeah.
Wow.
So you have, a lot of people in positions of power that benefit from delaying this as long as possible. The American economy, the average American would benefit from dealing with the problems now rather than dealing with them later when they're bigger and, the ramifications are more severe. But, there's that expression, in the long run, we're all dead. I mean, there are a lot of people who are going to die. They're not going to have to deal with it because they're going to get lucky and die, right? And it's, their kids that are going to be left with the problem.
Yeah, absolutely.
That was Bernie Madoff's. I mean, Bernie Madoff probably figured he'd get away with it long enough and it would blow up after he died. And so it wouldn't be his problem, right? It would be, his children or whoever. But, his plan blew up because the Ponzi scheme, collapsed, before he did.
No. Well, speaking of kicking the can down, it's been a conversation regarding the administration that the previous one, when the tensions with China regarding trade started in 2018, the hope was that the next administration is going to sit down and have a conversation to resolve the trade issue. And that didn't happen, we all know. Where do you see this is going, Peter?
Well, I was a very big critic of these trade deals in real time as Trump was negotiating them. I said nothing's going to happen. This is all a stunt. And I was correct. All the people that were hailing these trade deals, it was all, propaganda. It was just all Trump, just bluffing and, talking about how great everything is like he used to do about his steaks. Trump's steaks were the greatest steaks in the world, right? So he had the greatest trade deal.
I've never had one. I don't know.
And he had the USMCA, which he said was the greatest trade deal ever, which replaced NAFTA, which was the worst trade deal ever. And the only thing he did was change the name, and all of a sudden it magically became this great deal. But look, our trade imbalance has deteriorated dramatically over the last 5 years, including the years that Trump was in the White House. So, as I said earlier.
Wow, that's interesting. What about the, just to get your input while we have you, about the FDI, the foreign direct investments? Where do you, because I know, I checked some stats regarding, for example, China market, because China market is big. I looked at in Europe, but in the US, the foreign direct investment is not where it needs to be in comparison to how we used to be a decade or so ago.
No, in fact, the flows that come in now are probably just going into our overpriced, tech stocks and social media stocks and stuff like that. I mean, we're not actually building out our industrial infrastructure.
No.
None of that is going on.
Wow.
So it's all part of the bubble.
That's scary.
It is.
And that's hot money, though. That money can leave as soon as that bubble pops. Everybody is going to want out.
Wow.
Well, and so, speaking of the bubble pop, the question that I think is on many people's minds right now is, what's coming? What's going to happen?
Especially here in the US.
Well, I told you, we have a day of reckoning coming for the debt and the money printing. It's going to be a big increase in consumer prices. ultimately a big increase in interest rates, a crash in the markets in terms of gold. You know, whether the crash comes in terms of dollars, it's a tough call, but it doesn't matter. The real values of these assets is going to collapse. The American standard of living is going to be dramatically lowered. The question is, how will the voters react to all this?
Yeah.
How secure is our republic, what's left of it? You know, will the public blame capitalism? And will we end up as a, you know, complete socialist economy on the other end of this? You know, will we just nationalize everything and, you know, just assume that, you know, the problems are the result of capitalism and greed, and, you know, what we need is, you know, a government to run the economy? You know, do we become, you know, what the Soviet Union used to be, or what China used to be? You know, is that our future? You know, those countries pass, because, you know, we may decide that we're going to repeat that failed experiment. Because, I mean, the level of understanding in America is minimal. I mean, our population is so poorly educated, or not educated at all, about economics, and really has no clue. And they are very easy to believe the promises of politicians. And that's very dangerous, you know, for our nation.
Well, that's why I always say, I tried, and I mean it, Peter, when I say thank you for truly, throughout your podcast, throughout your engagements, presentations, and so forth, for educating the masses. So I truly applaud your efforts, because you realize that, you know, most of Americans have no clue what's going on. They're not willing to learn. They are not willing to understand the dynamics. And that concept of the government is for the people, by the people, they don't understand it. They just...
Well, and I think a big part of that comes from a feeling of, you know, if you do dive into it, all of it sounds bad. Right? All of it sounds bad. And I don't know that very many people feel right now in the United States that they have much of a say about what's going on. And it's coming from so many different directions at once. It's very challenging to choose one direction and say, okay, I'm going to educate myself in this. But I don't know that there is something that's more important to educate yourself in than economy.
Yeah. Not only educate yourself, but try to help educate everyone you know. You know, we got to have a network effect on knowledge, so that more people understand what's happening, so the government can't pull as much wool over as many people's eyes and con them into believing that capitalism is the problem, and you know, get them to surrender even more of their freedoms to government. So that government has even more power to ultimately do even more harm. But not only is it important that people get educated, but they need to protect themselves from becoming broke. That's a big threat.
Yes, that's my next question.
That's why, you know, I'm trying to get everybody who will listen to get out of U.S. dollars before the bottom drops out, get out of U.S. bonds, out of U.S. stocks. I'm helping my clients build portfolios of foreign stocks, good dividend-paying stocks with lots of value, lots of assets. These portfolios will withstand a dollar crash. And so they will help maintain a quality of living, because as the dollar goes down, these portfolios go up, and so does the income that they generate. And so if prices go up, well, now you have a lot more income to pay those higher prices, and you can maintain your overall standard of living. So people should be listening to my podcasts you know, regularly, and telling their friends, but they also should be setting up accounts with me at Euro Pacific Capital, Euro Pacific Asset Management. They can be buying my funds. You know, my funds are available, Euro Pacific funds, at most discount brokerage firms, but you can also have accounts directly with us. We can guide you into the funds or into individual stocks. Everybody should own some gold, physical gold in your possession. You can contact Schiff Gold and speak to one of the representatives there. Buy yourself some gold, buy some silver, have some real money, because when all this funny money crashes, you need something real to fall back on.
Well, and so, you know, I know that people talk to you a lot about Bitcoin and that whole the whole cryptocurrency situation. What do you feel about that?
It's just another part of the bubble. It's just another make-believe asset that's caught up in a mania. It's a byproduct of the Fed money printing. I mean, directly, it's it actually generates a lot of its interest based on the Fed and all the money printing. A lot of people will say Bitcoin isn't the bubble, Bitcoin is the pin. It's not the pin. It will be pricked. It will find a pin one day. Maybe that pin will be gold. I don't know. But it's just another example, probably the most obvious and the most grotesque example of a mania. And I do think when historians look back at this time period and write about the asset bubbles, I think the biggest asset bubble will be the cryptocurrencies, Bitcoin, et al., all the altcoins. And I think it'll be the one that people in the future, have the hardest time understanding, like how it could have even happened. Just like when people today learn about the Dutch tulip mania, and people are like, but how could people have actually thought this? Well, I'm sure it seemed very logical to the people at the time who had their life saving in tulips.
Yeah.
You have to live through it and experience it to understand it. But when you look back at it from, a vantage point where, it's all hindsight and you know how it turned out, it's pretty obvious how stupid people were being. And, in 50 years or 100 years, it'll be very obvious to the people in the future how stupid the people of the present are being.
Well, so do you think that it changes in circumstances like El Salvador, for example, where it is being utilized to some extent to actually buy things?
Because it's not really being utilized. It's just a gimmick. The big Bitcoin whales convinced El Salvador to do this. Just like they got some of these mayors now. Oh, I'm going to take my first salary in Bitcoin. This is all PR nonsense. I mean, they're not getting salaries in Bitcoin. Their salaries are in dollars. They're not going to work for Bitcoin. But they're going to have this, okay, you can pay me in Bitcoin this one time, because then I can take the Bitcoin and sell it so that I can pay my rent and buy my groceries. But they're just doing this because the powers that be, the big whales in Bitcoin, need to drive this narrative that somehow Bitcoin is becoming mainstream and being adopted, because they have to sucker in more buyers so they can sell.
Interesting.
I mean,
and just for our viewers, for you to know, we're gonna have a link to Peter's
to all of
to
your
all
website,
of your social media and all that for you to know. We're gonna have that on the description. I want to just ask one more question, Peter, regarding the value of the gold. Where do you see it going moving forward, knowing that I heard from the Federal Reserve, not the Federal Reserve, I take this back. I heard from Janet Yellen, the Treasury Secretary, that there will be no interest in increasing the interest rate. Why? Because they want to keep the first quarter of 2022 be on a good footing. I would like to know for our viewers where the value of the gold is going to be should the Treasury Department move in with that policy.
Well, the value of gold remains stable. It's the price of everything else that falls when measured in gold. Although I think right now gold is underpriced. So I think there's more value in gold than is currently reflected by its $1,800 price, because there's a lot of confidence in central banks, in the Fed. People have a high risk tolerance right now. Everybody wants to gamble. Nobody thinks they can lose. So there's not a lot of demand for gold in this mania. And so gold is undervalued by the market. So I do think the real value of gold is probably quite a bit higher than the current price. Maybe gold should be, $2,500, $3,000 right now. But based on what's going to happen to the dollar in the future, the price of gold will be much, much higher than that. But it really, again, doesn't reflect gold going up. It reflects everything else going down.
And hypothetically, if this to happen, Peter, where do you see the price of gold?
Well, I mean, I think the price of gold is going to be much, much higher. As I said earlier in the podcast, I said maybe the Dow is 50,000 and gold is 50,000. So $50,000 gold is, but we're not going to get $50,000 gold unless we have massive inflation, right?
Yeah.
Oil prices are going to go way up, copper prices, wheat price. Gold is not going to go up in a vacuum.
Yeah.
It's going to go way up as a reflection of the dollar going way down. I mean, what is the price of gold in Zimbabwe? It's trillions,
Right.
right? So it just is a measure of what's happening to the value of your currency.
So there will be a stable
Yes.
assets to have actually in gold. So.
All right.
So Peter, is there anything that you feel that our viewers should really know about how to sort of protect themselves, for lack of better term?
Well, yeah, again, contact my representatives. I mean, they'll talk to you, have a one-on-one conversation about your current portfolio, your goals, your objectives, get a feel for your risk tolerance and try to craft the right portfolio for you that incorporates all these themes so that you can invest for the future. You don't want to invest looking in the rearview mirror and think about what worked during the bubble. You want to anticipate what's going to work as the air is coming out of that bubble. And that's what we're doing.
Exactly.
Wonderful. Well, thank you so much, Peter. We're very honored to have had you.
All right, my pleasure. Take care, guys. Keep up the good work.
Well, thank you very much, Peter. So to our viewers, we hope you find the insights from Peter Schiff very, very insightful. As I said earlier, we will have the link to Peter's social media and all that stuff, so you can check him out for those who do not know who Peter Schiff is. And we want to thank our guest, Peter. We thank you so much for carving out time for us.
Sure. Thanks. And people should follow me, Twitter, Facebook, Instagram, YouTube. I mean, and invite your friends to follow me too. Again, we got to spread the truth. There's an old saying about a lie goes halfway around the world before the truth gets out of bed. So I got a lot of liars out there that I'm competing with. So I need more people to help spread my message.
We understand that well. And when we release this episode, we will @Peter, and we will put the list of all of his information in the description box below.
So,
all right, take care, guys.
Bye-bye.